aimed, of course, at supporting the price of crude, but they were due to expire at the end of this month. Joining me now to analyse is Cornelia Meyer, who's Chief Executive of Meyer Resources and an independent energy analyst. Thanks for joining us, Cornelia. So we've seen little change to the oil price today as a result of this decision, and I expect that underlines why they've done it, because the demand really just isn't there for their exports right now.
Yes, and we actually have seen quite a bit of change in the sense yesterday it went, or just after, yesterday it just went down by more than 2% because they said they would just explain cuts. They would actually release the third level of cuts. The 2.2 million barrels of voluntary cuts could be released portion by portion should market conditions warrant it, and that had a bad effect on the oil price. We are now below $80 for Brent, which we were there last time in February, early February.
Fascinating stuff. This strategy really influenced by the fact that the US has been pumping much more oil for itself in recent times. Is that a temporary phenomenon, or can it continue indefinitely, something OPEC just has to get used to?
Well, you have seen, not just the US, you've seen a lot of barrels come out of Brazil and for the first time ever out of Guyana. And OPEC has to react to these non-OPEC plus producers who are just putting on barrels. And to make matters worse, you see that, for instance, Russia is putting on stream another field at some stage, which will also produce more. So you know, there is more production, and at the same time, as you rightly pointed out, in China we have lackluster demand. In the US, we need to, this driving season, figure out what really the impact of more EVs, electric vehicles, especially on the coasts, will be on the gasoline demand. So that's something to look at this driving season. So, you know, there are both demand and supply levers who sort of do not work at this point in favor of a higher oil price.
Okay, Cornelia Meyer, thank you very much for joining us with your analysis today.